Okay.
Gupta sir, you can start now.
Uh, Good evening, friends. I am your KK Gupta. I am your host for this webinar. You must be knowing that Association for Financial Advisor of India is conducting every week mostly knowledge sharing webinars on different subjects. Under the series of association, we have already completed 32 webinars, which started from 1st of last year. On the request of our member, which are about 400 members with us, so we try to come up to their expectation beside the bankers, without our entrepreneurs and other people on the subjects. On the demand of our members, we are going to conduct this webinar in respect of budget 23-24, government constraint, and industry expectation. What are the industry expecting from us? That we will try to cover in this webinar. So upcoming budget will be crucial one for the government. With election around the corners, the government will be walking on a tightrope of growth and fiscal prudence. Thus, a bit budget balancing of the two will be essential. Will the government be able to do it? And we will find out on February 1st only. In accordance to the Constitution of India, Article 112, it is necessary to present a budget at the Parliament before the beginning of every financial year. The Union budget is allotted for upcoming fiscal years, which start from 1st April and end on 31st March of the next year. Projected receivable and payable for the fiscal years in two major parts. Either we say the capital expenditures, capital budget, and revenue budget. To bring about rapid and balanced economic growth of our country, coupled with social justice and equality, the budget are being presented. When we seen the last year budget, where it is estimated, where it is budgeted, that the fiscal deficit will be 6.4% of the GDP. GDP is hovering around 9.27%, and capital expenditure, which is envisaged, was 10.68 lakh crore rupees. Now, as per information available with us, the GDP might be touching into 7%. And the key objective of any budget to ensure efficient allocation of resources, reduce unemployment and poverty level, reduce wealth and income disparity, keep a check on the prices, change in tax structure. I think these are the major key point with us. So we are eminent speaker with us. We are with us Dr. Farid Ahmed, who is a former executive director of Punjab and Sindh Bank. We are with us Manjunath BR, who is professor of finance and analytic, Kirloskar Institute of Advanced Management Studies. We are with us CA Mohit, managing partner AC Bathuria and Company. We are with us CA Anil Javed, who is proprietor of Anil Javed and Company's Chartered Accountants. We are with us CA Manish Jain, managing director Finman Advisor Limited. So first of all, I am coming to respected Farid Ahmed. Farid Ahmed is eminent person who is a former executive director of Punjab and Sindh Bank, presently working as a visiting faculty to National Institute of Bank Management, Pune, and Indian Institute of Bank Management, Guwahati. Dr. Ahmed is a postgraduate in agriculture economics, joined Corporation Bank in 1983, and filled various leadership positions in different over 34 years and proved to be a successful banker. He was a circle general manager with Corporation Bank before his appointment as executive director of Punjab and Sindh Bank. During his career in the banking sector, he had done a lot of initiatives and administration ability to come up to expectation of the bank. His PhD done in 2017 and his work title Analysis and Modeling of Management Assets Quality in Public Sector and Private Bank. I think I will only say, Dr. Sir, what changes to tax structure are businessing advocating for the union budget? So have any thought in that? What changes is required for a tax structure, sir? Dr. Ahmed, sir.
Thank you, Gupta ji. In fact, before touching upon the tax structure, few points I wanted to tell under what backdrop or the circumstances this budget is coming. As we are all aware, there is uncertainty throughout the world, geopolitical uncertainty, sluggish global economic development, global financial uncertainties. All this comes. Adding to this, there is a recession in the developed countries. In fact, Europe and Japan are a near certainty for the recession. And we don't know how long the Ukraine war will continue since no efforts are being made to end it. And we don't know the direction in which the capital, foreign direct investments or portfolio investments will flow. And what will happen internally, if you see in the country, there are 9 states are going for the elections, assembly elections. So the major risk to Indian growth trajectory arises from continual global supply side uncertainties. Keeping these uncertainties, the major objective of the government while presenting the budget after 2 years of pandemic, of support and recovery, last year it was attempted to have the growth budget. So that growth budget this year also they will try to continue. And specifically coming, before discussing about the other things, specifically coming to answer your question, that what are the expectations of the may come from this budget about the taxation. There are 2 things. Rationalization of taxation is very much required and a lot of expectations from the public. As far as the individual and corporate tax is concerned, there are expectations that changes in the slabs, increase in the slabs, increase in the ATC exemption, and also increase in the contribution to the public provident fund and all those things. But keeping the level of the fiscal deficit, which is one of the highest level nowadays, so 6.5%, the government may not go for the drastic reduction of the fiscal deficit from 6.5 to 5.5 or 5%, they may go for 50 basis points or a 60 basis point reduction. Keeping that in objective, offering the incentives in the taxation may be very, very limited. However, it is a genuine demand from the public and also the corporates for rationalization of the GST and also for the increase in the slabs. According to me, there are two aspects the government can think of: increasing the minimum slab that is there from 2.5 lakhs for non-senior citizens and senior citizens about 3 lakhs. They may try to increase to 4.5 lakhs to 5 lakhs, and the maximum rate of tax they can reduce it to 25%. These steps they can initiate, because even if you increase the slabs at higher level, the incremental income will go for the savings or the investments. Definitely that will be useful for the country, but the lower level, the lower slabs, if it is increased, the incremental income, whatever the additional disposable income is coming into the hands of the people, it will be diverted towards the consumption, which is the need of the hour for the to give a fillip to the domestic economy. Another important aspect is required is the rationalization of the capital gains tax, because the capital gain tax is based upon the holding period and the classes of assets. That is very, very complicated and complex. One has to, first of all, has to classify what type of asset, then it is a long term or short term, all those things. So once it is arrived, then there are different rates for different types of assets. So instead of having so much complicated or complex system, the capital gain tax can be rationalized. Only two categories, that is short term or long term, irrespective of the assets. Same period should be treated as a long term or short term, and one rate, 10% for the long term, 15% for short term. That is what the market is expecting, individuals are expecting. I think the finance ministry and her team will give a thought for it.
So, Dr. Sir, you have rightly touched about the taxation position. Though whether you feel that the reduction in the non-spending, non-priority expenses, what is your view on that respect? Because the fiscal deficit as projected in last budget was 6.4% of GDP. Now you feel that fiscal deficit will further increase?
No, fiscal deficit may not increase further. They will, as I said, the government may try to control it around 6% or 5.9%. That's why what I am telling is around 50 basis points they want to reduce, but without compromising the investment, because the government's major priority, if you see in the last year onwards, it is in capital budget, capex expenditure. So they want, and also they have announced a national that is a pipeline for infrastructure with an overall outlay of about 111 lakhs crores over a period of 5 years. That means this year again there will be an infusion of capex about 20 to 22 lakh crores, either from the central government, state government, or the private investment. Keeping this, the government will not reduce the overall investment expenditure towards the capex, but a positive thing is the estimated magnitude of this gross tax revenues is about 31 to 32 lakh crores during this 20 to 23, which is 5 to 6, approximately 4 to 5 lakh crores more than what is estimated, 4 lakh crores more than what is estimated in the budget last year. So keeping in this view and also expecting the growth of the economy, which seems to be unlikely to fall below 6% in the next coming 23-24, they will not reduce the investment, but they will balance the fiscal deficit and also the inflationary pressures.
Doctor, I think you rightly touched about the fiscal deficit will not going to increase as per the projection. So what, because achieve the 5 trillion economy. So GDP growth is the major aspect. If our GDP is hovering around 7% against the projection of 9.27%, you feel that what action measures should be taken by the government to achieve the 5 trillion economic goal? Have any view on that, Doctor?
What one I see, no doubt, the government is having the ambitious visionary goal of $5 trillion economy by 2025. But unfortunately, COVID-19 has affected globally, and we are not an exception. Definitely, its impact was there in the first year where the economy was contracted, and then it has given a good recovery. But it may not be 2025. Definitely, with a time lag of 1.5 years, the economy is on the path of reaching the $5 trillion economy, because there are certain plus points. If you see, in spite of the global economic slowdown, so many negativities, which I told, financial uncertainties. In India also, the inflation was very high, which was beyond the targeted norm of Reserve Bank of India. But if you see the second quarter GDP, it is normalized the growth about 6.3%, and the agriculture and allied sectors, they have grown by 4.6%. And most importantly, the PMI indicated a strong expansion both in manufacturing and services during the month of November 2022 at the level of 55.7 and 56.4. And very, very important aspect is, after a long gap of around 11 months, the CPI inflation is moderated to 5.9 in November, and it is estimated that it is further reduced to 5.7 in December. And all these things, keeping in this view, even in the next year, the economic growth, GDP growth, will not be less than 6%. However, to reach 5 trillion economy, we have to realize one thing, that this 6 or 8% growth will not be sufficient, because we are at about 3 lakh crores, 3 trillion economy. So 1.5 trillion to 2 trillion should be incrementally, we should add. So we need a growth of economy above 8 to 9%. It is possible, keeping in view with a 1 year or 2 year lag, not by 2025, by keeping in view then various programs the government of India have started. But it all depends upon how the global economy will have its impact in the coming days. Because earlier we used to feel sometimes in 2008 and 9, our economy is insulated from the global economy, but it is not the case. Whatever the global economy impact will be there, whether positive or negative, definitely it will be on the Indian economy, maybe with a time lag of a year or so or 6 months. Because the overall global economy is sluggish, our exports will be affected. So the government should give more thrust on the domestic economy. So our home economy should be broadened by developing the new growth sectors and accelerating the job creation in order to enhance the domestic demand, inclusive growth. Those things are most important. So the measures, whichever the government will take, it should result in the reduction of the cost of capital, cost of power, logistics, land, labor. This will be very, very important. And the government should need to continue its capital expenditure at as estimated or as introduced in the last year. They have to continue, and they have to meet the capital expenditure required for the implementation of the pipeline, national infrastructure pipeline. So they have to give the thrust on the infrastructure and the capex to spend an capex spend to give an impetus to growth while maintaining the path of fiscal prudence. As I said, fiscal deficit they should maintain around 6%. This national infrastructure pipeline is going to create a good social and economic infrastructure. With the focus on the infrastructure, with its multiplier effect, it will have a, on the allied activities, it gives a very good push to the economy. And the government focus should also be on the growing consumption, because the consumption and expenditure are two integral parts of Indian growth story. So capacity utilization and manufacturing sentiments are contingent to these two factors. So the government should look into it. So with the purchasing power looking to grow in the post-pandemic era, coupled with the government's vision of Atmanirbhar Bharat, besides infrastructure, agriculture and capital goods should be given an importance. So with the infrastructure, agriculture, capital goods, coupled with the banking, as the credit penetration continues to improve, definitely it will lead to a good economic growth in the country. But the government has also, though they have started so many schemes, particularly productivity linked scheme, this is limited to only certain corporates and also the large corporates. So government also needs to support domestic manufacturing and employment generation activities, industries, by expanding this PLI scheme. And so the government may enhance the PLI exposure and expand them to potentially upcoming industries for boosting the exports to the extent possible, and also to give a fillip to the Indian economy. Simultaneously, the government should focus on the development of rural segment, because due to the pandemic, a lot of laborers have gone back to the villages. But after the recovery of from the pandemic, though majority of the laborers have come, but some of the laborers are still in villages. In fact, the rural economy, particularly agricultural economy, basically is having a characteristic of disguised unemployment. In addition to that, this laborers is adding to the other laborers. So to create the demand in the rural segment, the government of India should focus on the rural sector focused schemes like NREGA and PM's Awas Yojana, Gramin, and all those schemes, so that the rural economy can be revived and also the demand can be increased. And also in the context, the government can utilize the Agri Infrastructure Fund, which they have introduced with a lakh of crores the last 2 years back. So in addition to this, as your first question, you said that about the taxation, the broaden the base of tax base, broadening the tax base by rationalizing the both indirect and direct taxes, GST and personal tax slabs and other things. So with this push, definitely the domestic economy will be given a fillip, and we have to find out our markets with such products that the importers wanted to buy our products. We have to produce such products, whether it is recession or otherwise in the other countries, they wanted to buy such products from India. After pandemic, China plus one is the now thinking. So the China plus one country should be the India, so that we will be on the path to 5 trillion economy.
Excellent, sir. Excellent. I think you have touched a very important issue of the production link incentive, which should be extended to other sectors also. Besides the export, other things are there. Further, the reduction in cost you are mentioning, you're also talking about the global economy effect will also be there. And you have given so many mantras how to get our 5 trillion economy grow. Instead of a GDP growth is maybe 6 to 7% this financial year. It may take 1 year or 2 years further to achieve the trillion economy. Thank you, Dr. Thank you very much. I will come back to you again. Coming to Dr. Manjunath Bia, Professor, Finance, Business Analytics, GM Institute of Technology. Mr. Manjunath has overall 16-year experience, 5 years in corporate experience in the investment banking and analytic domain and 10 years for academic experience. Mr. BR is currently a consultant for Knowledge and Human Development Authorities, Dubai, to deliver the circumvention activities and knowledge sharing across UK, qualification at all levels at a new age career. He has published 85 research papers and working papers at a national and international level conference and journal publications. We are happy to see you, sir, with us on this occasion. So just, sir, for your viewpoint, you are a very learned person and giving some training to the big people, big students. And what are the government's top priority for the economy of upcoming fiscal years? How you feel that? Because economy is the major aspects. Any budget, because in our home, we are also preparing a budget. We are also preparing our balance sheet. And the government is also preparing a balance sheet. Developed country balance sheet depict how the country are developing. For the only economic is the major aspects for any development. What do you feel that? For economic development, what priority the government should take? Head over to Mr. Sir.
Yeah, thank you, Guptaji. Well, that is the buzz in the country saying that what's the government priorities on now. Well, in line with the set target or a kind of dream, what the central government and the finance ministry has said to have around 4.5% of GDP, the fiscal deficit, a target. In line with that, definitely, I'm optimistic that the opportunities which I would like to now share are on the top priorities. In fact, the very well addressed by the first speaker in terms of the rural economy. Yeah, even that is in my portfolio as one of the top priority now to look at, because there are three important things which I'm actually looking into the rural economy. So here, there is a huge scope for the country and the budget to come across and touch upon the rural economic aspects. Maybe the first point would be something related to the high inflation, which has resulted in terms of the wage rate deteriorated in 22. And this has led to increase in the input prices, and there is a kind of volatility in the weather conditions. This could be one area wherein now the budget should be focusing on. And the second important aspect under the rural economy, what I would like to address is the rural employment. Well, the first speaker very well addressed in terms of that rural employment. Soon after the COVID, there are a huge number of people from the villages who would not turn up. And now what do you do with them is what, which is a very top priority for the government, certainly, because when we look at the NREGA, which we talk about the financial year for the 23, there are around 73,000 crore, in simple words, say 0.3% of the GDP, as per the sources, which we have seen in the last few days. And how there should be another important aspect when we look at the rural economy, that is stimulus. Stimulus to related schemes, something related to the crop insurance, rural road infrastructure, low-cost housing, maybe the utilities, food processing industry, power. So these are the areas now wherein certainly the FM, the finance minister, will be looking into in terms of the rural economy. The second point what I have is facilitating the green transition. Of course, the sustainable economy and the access to the green finance. We all know that service sector plays a predominant role and a key driver for the Indian economy, not only for the Indian economy, for the any economy matter. But having said and done that, there is a change in the mindset when we shift from, say, when we shift our focus towards the growth strategy, mainly focusing on the manufacturing and the infrastructure development. Now, these both areas are having the energy, say, the carbon intensive. Larger firms enjoy their balance sheets are very well positioned, sir. But what about the small organizations, medium organizations, tiny organizations? So in order to manage these around 65 million units in India, as per the sources, micro, small, and medium enterprises have the significant carbon footprint. So certainly there should be an appeal and the opportunity for these 65 million units to have an access to the green finance. And this is what the second opportunity for the coming budget is certainly looking at. And the third thing is probably you may, Gupta ji, you may have a kind of smile on your face because certainly these days have given a kind of signal for every individual to have the insurance. So the third opportunity for the coming budget would be the health and education. Now there was a talk, a kind of big talk in the nation saying that the income tax exemption limit should be raised from the current levels. And yeah, now where is the scope for that? Maybe in terms of having a kind of education, providing education to the children by the parents. That is one aspect. And the second thing is ensuring that their family members are very well safely covered, maybe in terms of the health insurances are concerned. Maybe that is the another opportunity where the government certainly should look at. And my next proposal would be the capex. First speaker has rightly pointed out something called as the public sector and public investments. Yes, of course, when we look at the capital expenditure with respect to the public enterprises and the public investments, there is a need to revive, especially the investment cycle when we talk about on the public sector. As we have already witnessed the slowdown in terms of the economic growth and a tighter financial conditions. And this has led to have something called as capex, which is currently stood at around 7.5 lakh crore, which is to be estimated for the FY23. And upon the 27% versus 5.9 lakh crore in the financial year 22, which was something like, say, a big task now. It's an opportunity. Most likely there is something called as a focus, which is supplementing on the existing institutional structures, maybe with a proper channel of NIP, National Infrastructure Pipeline, and the funding mechanism for these units. And to end the another opportunity, in line with all these things, I would also like to touch like how Professor has, the first speaker has talked about the manufacturing and the production linked incentive schemes, especially for I'm optimistic on this now, large scale electronics manufacturing, a scheme for promotion and the manufacturing of electronic components with the help of say specs. These are at the outline in terms of the opportunities where the present budget would be certainly looking for, Gupta ji, what I think of these things.
Very nicely you have covered everything. We are talking about the capex and Dr. Farid Ahmad also talking about that. What are you talking about the green energy? Instead of a carbon, without talking about the 65 million people are, they should convert into a green energy, what you're talking about.
Yeah.
So, were you facing any challenges, sir, by the government to prepare budget at this stage when the all around election year is there? How you feel? Any challenges you feel that?
Yeah, certainly there are challenges for the government to come up with these budget. The reason is, one is when we talk about the sustainable economy, then certainly we have to look at the aspects which are already in line. Economic slowdown would be the one thing, and the inflation which is out of control, and we are every now and then trying to put a hold on that. The pandemic, the war situation. Yes, of course, keeping in mind all these aspects, and of course, global geopolitical tensions. Even this is also resulting in terms of a major challenge for the government to come up with. And certainly, I'm optimistic, having said and done that. I'll give a very simple point here. When you're on a highway, when you have traveled across almost, say, a couple of hours, you will be having a kind of grip on that road, and then definitely you will be taking the next level. You'll be shifting your gear.
Sure.
And now the present government has got that kind of opportunity in terms of shifting their gear and then ensuring that, yes, we are not economy which is turning towards down, but yes, we are coming out of all such kind of barriers and then touching the million, 5 million, trillion, and then the 7 million trillions in terms of the upcoming years. That's the call from my side, sir.
Oh, very nice, very nice. Sir, you are a professor of the finance and you are also giving training from the technology or something, the Institute of Technology or what. How you feel that for this budget, this digital rupees, what you are talking about, or digital economy we are talking about, or we are talking about the technology aspects. Have any view in that respect for this budget?
Yeah, definitely there is a huge scope for the technological development. As I rightly addressed one of the important points with respect to making a provisions with respect to the larger organizations and then helping the smaller organizations. Now, these 65 million units, which are of the small size, medium size and tiny units, which are now trying to pick up. And there is a huge scope in terms of the infrastructure development. And when I talk about the infrastructure development, yes, of course, there is a huge scope for the technological development as a part of the infrastructure too.
Very nice, very nice. Thank you very much, sir. I think you have covered very nicely for that. Now I'm coming to CA, Shri Mohit Bhattacharya, sir, who is FCA, Insolvency Resolution Professional, Restored Value, Security and Financial Aspect. He is Managing Partner in AC Bhattacharya and Company Chartered Accountant. Stood first in Chartered Accountancy Final in Eastern Region. A co-opted member of the study group of ICAI on the guidance notes and upgradation of this thing. Sir, I'm just coming to you. What are the tax structure? What changes to tax structure are business advocating for the union budget? Because everybody talking, we are salary class people, we are talking about some further ETC may concession should be given. Even when we are talking to real estate people, they are asking instead of 2 lakhs interest, it should be 4 lakhs interest. Rebate should be allowed. Everybody talking about the salary people for the income tax structures. Because you are the expert in this line, what do you feel, sir? Mohit, sir.
Thank you. I doubt it. First, thank you, Gupta ji. Thank you so much for inviting me. Very good evening to all the participants here. Very good evening to all my fellow panelists. So I may be saying something at the cost of repetition to what Dr. Ahmed and Dr. Manjunath have said. So it has been very rightly pointed out that the tax structure should be tweaked. You see, our last time the tax structure was tweaked in 2017-18. Thereafter, there has been no changes, save and except a new regime for taxation for individuals which the government has introduced. But again, that is subject to very onerous conditions and it has not found much adaptability. So I think the need of the hour is that the government should tweak the tax slab. And as rightly Dr. Ahmed was also saying that we have an exemption limit of 2.5 lakhs. Above 10 lakhs, we are charged a tax rate of 30%, which is quite high when compared to, say, companies which are paying a tax concession of 15% or 30%. So the tax rate should be tweaked. The slab rate should be suitably enhanced. So maybe something like in excess of 10%, we pay 30%. So maybe in excess of 15 lakhs or 20 lakhs, we pay 30%. Second point is relation to a higher surcharge. You see, they had introduced surcharge at the time when the government needed the money. And in income in excess of 2 crores, individuals are required to pay a surcharge of 25%, and in excess of 5 crores, they are required to pay a surcharge of 37%. And the tax rate at the highest level comes to as high as 43%. This is too high, and this again discourages people. And what we have seen in the last 5-10 years, so the quantum of money which has gone outside from India is humongous. So I think the government should reduce the highest rate of surcharge, or at least it should come out with a roadmap by when it would, align the surcharge. 2 points more. One is very important, which Dr. Ahmed was also pointed out, this capital gains structure. This capital gains structure, we get often puzzled with the capital gains calculation. So for some asset, you say the holding period is 1 year, for some asset 2 years, for some asset 3 years. Now when it comes to shares, listed shares are taxed at the rate of 10%. You do not give any indexation benefit. Unlisted shares taxed at 20%. You give indexation benefit. There is also confusion relating to grandfathering, big confusion. So therefore what they say that if you are holding listed shares, 31st January 2018 is the cutoff date. So you can take the fair value as on that date, the market price as on that date, and you compute. Now we come across practical cases, say a company was listed and this company has merged with another company. Now what happens to that? So I had certain shares which are held by my father, and now these shares have been gifted to me. Now what happens to that? So capital gains is one area where there is lot of confusion. So for say what you call the debenture or a bond, you will say you will not give indexation. For equity share, listed share, you will say you will not give indexation. But for unlisted share, you will give indexation. I think time has come that the government should rationalize the entire the capital gains. Now coming to the third aspect of a salaried class, you see, as far as sir, all are advocating reduction in tax rates, and what we have seen last 2 years, the current year as well as last year, the government has surpassed the direct tax collection set target. I don't think when it happened last, FY current year FY24, last year FY23, government was surprised by its own tax collection, not only in the direct tax but also in the indirect tax. So what is that? Is the one reason is that tax administration. And but if we see practically what has happened in last 5 years, and more particularly say post-COVID, hardly there are surveys. Of course, searches are there, but we all know what type of searches are happening. Scrutiny level has come down. So there is a voluntary compliance. People are voluntarily complying, voluntarily paying taxes. They say, forget it. Whatever taxes are there, let us pay, let us buy peace. I tell you, the quantum of scrutiny has gone down substantially. And if there is no scrutiny, there will be no appeal. In Calcutta Tribunal, the pendency has come down to a little around 4,000. And the way the tribunal is passing orders, maybe after 1.5 years, they would have not much cases even to dispose. So the government is following and should follow economic theory that the more you reduce taxes, the more will be better compliance. Maybe more people will come in the tax net, more savings, more consumption, more investment. Again, channelizing into increased demand. Again, this will incentivize even industry to produce more and more. And this will set the ball rolling for investments and capex. On salaried part, I think the salaried part is the most deprived class in terms of, any deduction or concession in terms of taxes. The standard deduction is a meager 50,000. Professionals invest in technology, professionals invest in development of skills, they get benefit of deduction of expenditure, but there is no benefit to the salaried class. And for 50,000 is nothing. So I think the standard deduction should be suitably revised to a much higher figure of say 2.5 to 3 lakhs. Now, government had fixed certain allowances, this children education allowance, a transport allowance, and these limits were set ages back. And no, these have never been revised. I do not find any revision in the exemption to various allowance in the last 10-15 years. So at all, if you do not want to retain, do not retain, because it is meaningless if you say the children education allowance is 100 rupees per month, the transport allowance is 800 rupees per month. As good as you downsize the income tax book, remove all the allowances or make it a little pragmatic. It should be a really rational to the present year. So I think, and last I would say, the government should do something about, besides you are talking of what tax cuts, government should simplify. So much complications are there in the tax structure. It becomes very, very difficult to understand. So therefore, sir, when a company calls us, so whether I'll get benefit of 80G, whether I'll get benefit of 80C or not. So when it comes to companies, we have 4 or 5 structures. In some we get some benefit, in some we do not get some benefit. So much complications is there. I think we have one section 194Q, we have one section 206(1)C on this TDS on purchases. It creates so much complications, and to add to the complications, you say that okay, you have to verify whether this taxpayer was a defaulter or not in filing tax returns in last 2 years. If it is so, then you have to deduct TDS at 20%. So you imagine companies day in, day out, if new party enrolls, they have to go to the website of the income tax department, find out whether what happens to the tax rate, whether it should be the normal rate or 20%. So much complex. I think the need of the hour is that message should go to the government that you please simplify. One more section they introduce 194 or hardly one can understand what the purpose through which it was introduced, and ultimately the circulars which the board is saying, totally out of context. So I think message should go from our association. Please simplify tax laws. And
Very nice. Very nice, Mohit. Like, one point is there. When we are startup, the tax structure is 15%. We are talking about the corporate, it is 25%. We are talking about the individual, it go up to 44% also. What do you feel that there should be some rationale on the structure of the this income tax?
You see, I think, sir, somebody panelist was saying of the China plus advantage. I think this is the perfect time where one should get of the China plus advantage. And this 15%, 25%, 130% rate of tax, individual 44, LLP 30%.
Yes.
So much tax rates there. The government is giving logic for it. I think this 44% surely should come down, and the maximum individual rate in any case should not be beyond 30%, or it may come down to 25%. For companies, we have different rates, but I think companies are taxed at 25.17%, and I don't think government would give any concession to that. But this 15%, a separate carve-out which is there, I think it is excellent. But I would say that this benefit should also be given to services sector. Services sector contribute 52% to the GDP, but this benefit is not given to the services sector. Retail, e-commerce, telecom, all are outside the purview of this sector. So, and even certain industries like telecom, you see, to be at internationally competitive, service sector should be given certain benefit. We had one section 10AA, and this has been phased out. The deduction is phased out. So I think this 15% which is there, that should even be extended to certain services sector.
Very nice, Mohit sir. Very nice. But one another point is there. If you are not paying a advance tax, you are being charged 24%. But when you pay some advance tax more, and what you are getting? You are getting 4%. So this is not a disparity. When you have to take money from the government, you have to take 4%. When you have to pay advance tax, you have to charge 24%. I think what do you feel in that respect? Whether the disparity or something should not be.
Absolutely right. If we have to get refund, we are giving nothing, even not a bank FD rate.
Yes,
right. Even not a bank FD. But when they have to charge, they will charge something like a Kabuliwala rate. Very true.
That's the point.
Yeah.
What do you feel, sir, for a capex? We are always talking because first Dr. Farid Ahmad was also talking about the capex or something. Because capex is the most important aspect. You feel that for any initiative, whether a tax, if you are putting capex instead of a depreciation or something, some initiative should not be given. Who want to put up some factory or a capex, something like that. Have any view on that?
Definitely. Even at the top, you see, India is growing towards semiconductor. It's growing towards EV. There is one China plus. So I think if government has to give the best of its best benefits to the industries in terms of accelerated depreciation, or in terms of higher deduction towards expenditure incurred, or in terms of, you see, R&D they used to give earlier as high as 175%, but it was misutilized. But I think we should also focus on R&D. So as you have rightly said, this is the right time, and government may consider raising resources through alternate means, and government has a lot of other means. You have the divestment, you have the telecom to raise the resources. So in divestment, we have, not been up to the mark, not even nowhere near the budgeted figures in the last 2 years. So government should raise resources through these and incentivize industries to set up more, produce more. So we can the vision of the government towards the 5 trillion, and now industry and all leaders are talking. Somebody is talking of 30 trillion, 40 trillion. That India would be top 3 nations by 2030. So to realize this goal, definitely what you have said, the government should think on those lines.
Have some view on that equity. If equity loss is there in the stock market, how it can be taxed? If equity, how it can be, you can say, taken into consideration? Why stock loss is there? Whether we can get the benefit under this policy, recent policy?
I could not get
Yes.
stock loss.
If I am incurring losses under a stock market,
Yeah. Okay. Okay.
so
Okay.
that can save the tax also.
No, so now you see your tax losses in stock market can be on two accounts. One is your trading account, one is your capital account.
Yes.
What they have said that if it is a capital loss, and if it is a long-term capital loss, it can be set off only against long-term capital gains. Why? They say that since long-term capital gains are taxed at a concessional rate, so I would allow you the benefit of set off only against long-term loss. But when it comes to short-term loss, they can be set off against only short-term capital gains. Long-term losses gains can even be set off against short-term losses.
My point is simple. If during this financial year I have some losses under a stock, whether it can be carried forward for next year.
Yes, yes. If you have a loss under capital gains, it can be carried forward up to 8 years. If you have-
Short term.
Short term can also be carried forward. Yes,
Can you
Stuart.
verify?
Yes, yes, yes. If you have trading loss, say trading loss, that also can be carried forward.
Can we clarify?
Yes, yes.
Thank you very much. Now I'm coming to Shri Anil Javak sir, who is proprietor at Javak and Chartered Accountant. Mr. Anil is a chartered accountant by profession, over 20 years experience in auditing financial services like project finance, income tax, VAT services, bank audit, cooperative credit, company audit, and legal matter. Mr. Anil, just want from
Yes,
you,
sir.
how the government planning to lower the fiscal deficit in the current financial year? You feel that the fiscal deficit which is hovering around, which they have projected last year about 6.4. So you feel that it will be remain the same, or it will be reduced? If you want to reduce, what action government should take to reduce the fiscal deficit?
Sir, I'm at the outset, I'm thankful to you, sir, for giving opportunity me to speak on this webinar. During 2023, the fiscal budget, fiscal deficit is 6.4%, which is the 16.61 lakh crores amount. And Honorable Finance Minister had told in August in Lok Sabha that they will decrease the fiscal budget by monetizing PUC and land bank and increasing buoyancy in taxation and compliance. But as per my thinking, as per Farid sir also say that total infrastructure expenditure is 111 million. Hello, sir, can you hear my voice? Hello.
Yes, we can hear you.
Sir, as Farid sir already talk upon that, the government require 111 lakh crores for infrastructure development, and we want we want India to a $5 trillion dollar economy. So I think that there may be possibility that the inflation will increase and deficit will also increase because more spending, more money in the market. But as per Finance Ministry, they told that in 2024-25 they will decrease the deficit by 4.4%. But the logic is the pandemic had pandemic and Ukraine war create all the world in a very shaky position. There is recession in all the world. Japan, Russia, just say Farid sir, and Ukraine war also make a very bad position to world economy is in doldrum. All world economy is doldrum. But India has a power to come with superpower because India has a consumption story. And Farid sir also told that the agriculture and the domestic production can help us to overcome this possibility. But we have to we have to rationalize the taxation and all the things in coming year to overcome these problems. Only demonetization and taxation cannot create 5 million USD dollar. We are working on making India Atmanirbhar and after EV, we have to less depend on crude. So we are making India EV hub and EV battery operated vehicles and capital. We have to less subsidies, freebies of foods and the export should be increased. This will overcome the deficit in coming years.
Sir, fiscal deficit
Yes,
cannot be increased by disinvestment. So you have some public sector undertakings which are incurring
yes,
losses,
sir.
which are incurring losses.
Yes, sir.
So it is not better
No, sir.
get the things done.
The monetization means we are selling the shares of the PSU to mobilize the money to repay the debts.
You agree with me? What we are talking about the fiscal deficit, it can be disinvestment of the loss-making unit, public unit,
PSU.
can be done. Or you can borrowing this from the Reserve Bank of India or the public to meet the deficit or something like that. So
Yes, sir.
what should be planned by the government so that the fiscal deficit be, this is one of the view of that disinvestment. Any other view regarding the reducing the fiscal deficit?
Only the taxation, government has income from taxation and only government has income from taxation only, and they have to more or less depend on taxation. So they must focus on domestic production and collect the taxes and make compliance. But as per Berutia sir, the compliances are so sticky that one cannot come and pay taxes because it is a self-assessment taxation here. The scrutiny are lesser. So tax compliance, India is only make India to overcome this fiscal deficit because taxation is the only way to finance the infrastructure development and all the expenditure which is planned by the government in budget.
Okay, another point is for the GST, if they are late filing or late or something like that, late payments,
Yes,
they are
sir.
charging heavy rate of interest. So
Yes, sir.
have any view of that?
No, sir. Interest is much for there because the people, businessmen are not reluctant to pay the taxes on time.
Acha, right.
Penalty should be there, but it is heavy. They should rationalize this because the government had collecting 1,50,000 crore, which is not expected by government. They are expecting 1 lakh crore at the time of the put GST law, and they are now recovering 1,50,000 crore. So they should compensate the small businessmen, MSME businessmen.
You feel that the interest being charged by the government on GST late payment is okay. Why? Well, there's no question of any election in something like that. You don't feel like that.
Yes, sir, but there should be a check on the businessmen because they are not paying taxes and returns in time. Government is not collecting money on time, so they have to wait for that.
Thank you very much, Mr. Navel. I will come back to you. Now I'm coming to CA Manish Jain, who is Managing Director, Finman Advisor, which is one of the largest credit rating advisory company. Manish is a CA by qualification, having working period of about 15 years in the field of credit rating, SMA rating, IPO grading, and other financial products. His practical experience include working with the top financial institutions like Research, Citicorp Finance. Who is there? In the area of credit rating and risk management, skilled in credit rating consultancy, his sharp analytic skill and accurate understanding of the business model enhance his ability in evaluating rating assignment and advising company on the risk management initiative. Adding a gel of the crowns in the year 2022, he is appointed as Chief Secretary to GITO, Bombay Zone. Now he is a Chief Secretary for the GITO. So, Mr. Jain, that's why I'm asking you, should the government consider introducing a uniform corporate tax of 15% in the budget? Have any view, Mr. Jain?
Yeah, Mr. Gupta. To position India as competitive hub for both manufacturing and service industries, companies are advocating for the introduction of uniform corporate tax rate of 15%. If you look, currently there are different tax rates for different type of companies. To bring parity and encourage global investors to set up shops in India, tax rate of 15% should be considered for all companies. Currently, the 15% tax rate was offered as an incentive only for new manufacturing facilities. There is no doubt that India needs to develop a manufacturing hub. However, it is also a fact that India has an edge in service sector. Therefore, we should further encourage the development and growth of service and allied sector. If India introduces corporate tax rate of 15% for all the companies operating all the sectors, then it will have one of the most competitive corporate tax rate in the world, and this will also meet among the large economies. Further, I believe this will also reduce the arbitrage of and the benefit of tax avoidance, because people will prefer paying 15%. And in fact, it should be a game changer, and global MNCs will also consider making India as a regional hub and regional headquarters as they expand their operation in Asia, Pacific and Middle East region. Given the customer base and talent pool that India has to offer, many foreign companies would like to come India and set up the So I believe it should be a good thing. Corporate tax, further, if you say corporate tax thinking of the present government needs a rigorous debate and serious thinking. The corporate tax account for 55% of the annual income tax collection and relax. So hence we have to implement a evidence-based tax policy and not impulsive, and this will boost the economy. Thank you.
Thank you, Mr. Munish. Munish, one point is there. Whether you feel that standard direction in the budget should increase somewhere?
This being the last budget, the government, because next year budget will be an interim budget only, so it should be a favorable. It should be a favorable budget this time.
It should be favorable.
Yeah.
Any hint you can give? What type of favorable it should be for the rural economy? It should be favorable, or for the businessman, or for the exporter? Anything you have view?
Yeah, we expect it to be favorable on a mass level. So must be mainly for the retail people or the rural must be there. And government is anyway much focused on the rural economy and agriculture. So it will be more focused, might be more focused on that this time.
Very nice. Very nice. So I'm coming to Mr. Manjunath, who is professor. It is, sir, out of box I was thinking. The public sector undertaking, which is a market, you can say their share are floated in a market where they are quoted below their book value. To have any view on that, because you are the man of finance, such company can be disinvested because their book value is much higher. What price quoted in a stock market is very, very less. Have any view on that respect, Mr. Manjunath, sir?
Yeah, thank you for this question. Well, sir, when we talk about the book value and the market value, it's really a certain when we talk about the disinvestment. The market prices might be the forces, because of the forces which we generally see. There are so many factors and the parameters which are involved to look at very carefully, and then probably as a strategy, the disinvestment can be brought into the action of, say, the public sector undertaking. Because all these days, if you can notice, there are certain sectors and the specific companies, though they had a fantastic history, now the company prices are under pressure because of the market forces. So now, having said and done, one as the market force, and the second as the strategy by the government on the PSUs in terms of reviving it, or helping in terms of having the disinvestment, or diversifying the complete line of businesses into some other units, or adding a new portfolio into the organization. Now, there are many aspects one has to look into before consider that as a strategy for the disinvestment. Sir, this is what I feel.
Very nice. Very nice. I think the proper way for such investment is. Sir, Dr. Freed, sir, have any views, sir, on that? Because you are expert in this field. Dr. Freed, आप unmute कीजिए sir, Freed sir. Unmute कर लीजिए sir. Hello. Unmute कीजिए sir. Yes. Have any views, Dr. Freed?
As far as he rightly said, there will be a lot of factors which will play to assess the market value, market capitalization, and book value. If you take the public sector banks into consideration, when compared to private sector banks, public sector banks, market capitalization will always be less. Even the book price to book value will be less than 1 most of the time, or at the maximum 1, as compared to the other profit making or other corporates, which will be 1.5 to 1.8. The reason is, the main reason or objective reason behind this, I can think it is the perception of the investor. Because the public sector banks, they feel that their balance sheet is opaque and they are under the control of the government of India as the major owner. So they may implement the directed lending. So they may not, because bank to bank, there is either private or government bank, there is no macroeconomical difference, inflation, opportunities for lending and all those things. But these factors, the government ownership plays a very important role, and the risk perception of the investor. They feel that because in the banks, they will decide the profit, it is not the price to earning ratio, they will decide based upon the spread available to the banks. How best the banks will utilize the funds at their available with them, because the public sector banks are given a additional responsibility or added responsibility of the socio-economic development. The investor thinks that there is a risk in the public sector credit deployment as compared to the private sector, and also the asset quality of the public sector banks. That also they will keep in mind. That's why the book value to raise price to the book value is less in the case of public sector banks. But if you have seen, whenever there is a certain announcements by the government, either in the budget or otherwise about the recovery measures or amendment of the IBC or introduction of the IBC, such measures definitely has a positive impact on the price to book value of the public sector banks.
Thank you very much, sir. This is the most important issue which we want to convey to the government. If they want to disinvest something, let's see the book value. And what is the share, their share are being quoted in the market. If the book value is much higher, whether they can think to have a disinvestment. Have any view from any eminent speaker on this subject? Because this is most important issue.
Yeah.
This,
Can I
sir,
come in?
sir, Mohit sir, please, please.
This is a very, very interesting issue. And as you said, why it is below book value. I just take one point up to finance sector se hai. If we see the book value of the bank today as on say 14th January 23, and if we see 10 years ago, what we will find, the book value at that time was substantially higher in most of the public sector banks than it is today, except SBI. 1 point. Second point, they have been historically trading last 10-20 years at a range of 0.5 book value to 0.1 time book value, even at historical cost. This is not even their fair value. So this speaks of itself that the combined market cap of all public sector banks taken together is less than that of HDFC Bank. only one bank, HDFC Bank.
Right.
So, so I think, but I must compliment the government, Gupta sir, one thing that they have reduced, by amalgamation, they have reduced the number of public sector banks.
Yeah, right.
I think, and this is a very challenging area, but the way the government has amalgamated all the subsidiaries into SBI, a number of banks into Canara and PNB without much hassle, I think we must compliment the government for that. And I think it must also be in their pipeline. Then sooner or later, they are going to maybe divest some of the public sector banks. So now we have virtually only 4 or 5 large private sector, public sector banks.
5 lakhs.
Right, PNB, Canara, Bank of Baroda, and I think Allahabad and UCO, yes, for other reasons. They are-
Union Bank, State Bank.
Yeah,
Very nicely, Mohit. I think I overstretched the time because always webinar is being overstretched. So really, this webinar is very, very useful. So for the government also, for our listener also, for our members also, who are the finance expert. At the end, I have no word to express my gratitude on behalf of myself and Association for Financial Advisor of India, to Dr. Farid Ahmed, to Shri Manjunath sir, to Shri Mohit sir, to Mr. Anil sir, and Maurice Jain sir. So on our short notice, I think of all eminent speakers was here to give their personal thoughts. We have not discussed any bookish knowledge or something. We discussed the practical aspects of our experience. I'm really sorry today I missed Amarjit Chopra, who was the past president of the CIF, who was not well. Otherwise, we would have benefited from his vast knowledge regarding the budget or something like that. I express my regret for that. I'm thankful to all my eminent speakers. This association was formed 2021. In October, we formed this. This is non-profit organizations. We are imparting the knowledge. The main purpose of this association is to impart the knowledge to our members. So we are more than 400 members. I request through this webinar to please enroll yourself as a member of this association, because your association will be helpful to us to further growth story of the association, like the mutual fund or something like that. I'm also thankful to off-the-screen people who helped me a lot, like Mr. Joginder, like Lokesh, like Paridaji, like Mr. Chaudhary, who is the architect of this webinars, who is always helping us to draft the webinars and invite the speakers. I'm thankful to these people. I'm also representing Resurgent India, who is merchant banker, who is investment banker, who is providing training to the bankers, to the public sector undertaking. We are drafting the technical viability report, DPR, and so many others. But government advisory service, we are also doing it. We are in insolvency also. With this word, again, I express my thanks to the eminent speaker, to the participants who always obliged us to give their feedback to us. I'm also requesting all the participants who are present here to give your free and frank opinion of this webinar, so that if any improvement is required, so we can do it from our end, so that it can be beneficial to the members, to the bankers, and to the entrepreneurs. Thank you very much. Thank you for that. Thank you very much.
thank you. Thank you, sir.
Thank you.
Thank you.
Thank you. Thank you, sir. Thank you.
Thank you very much.